Hey everybody, it's Pete. Good morning. Today is Thursday, May 28th, 2020. Welcome to today's episode of Stocks for Breakfast. Let's grab our coffee and get started. We're about 3.5 hours earlier today than the market opens. We are going to discuss a topic today that was pretty interesting because I'm starting to get a lot of feedback and a lot of emails as well as comments. Which, by the way, I love the comments because it gives me more fuel to really hit on the topics that are the most interest to you. And if you like these videos, absolutely give us a thumbs up if you find them helpful, and click down and subscribe. This way you can get updates. Today we're going to find how to find the stocks to trade that are right for you. That's a really big topic because what I might trade as somebody with 20 years of experience in the market might be slightly different than with somebody who is just starting out trading. And quite honestly, it should, because we have different experience levels as far as how much volatility we can handle, how many distinctions we could make, how many stocks we can watch at the same time, buying power, capital, risk tolerance, all of that stuff is different. However, what really does not change in kind of the history of the market is which stocks are most oftenly traded. And if you're an English teacher, I'm not sure, sorry about that. I don't know if that's perfect, but it says it the right way. In the history of stock trading, which types of stocks are the ones that active traders produce the greatest and the most consistent monthly profits in? And it might shock a lot of people, but the majority of traders that I've worked with over the years, including myself, and I've traded with some big traders, multi-million-dollar annual income traders, we trade the same stocks over and over again. And I know that's hard to believe because most people go, oh, I got to read the news, I got to see what's going on. And we have to separate trading from investing. And investing is you have an opinion in a stock and you're going to hang on to it, and for a long time, you really care about, you believe in the company and that kind of stuff. Trading is not the same thing. And trading is, you need liquidity, you need activity, you need consistent smart money participation, meaning that you could look at a chart, and here's really important, something that is a really quick lesson that I want to word this properly. A lot of people write in and say, I'm new, and I like what you're saying, but I don't want to be confused. Like there's so much to watch and so much to pay attention to. It's overwhelming. Here's a tip, especially if you're an active trader. And we'll take a look at this in a second. Consistent daily, weekly, and monthly activity by the smart money means that you typically can look at a chart and see large green and large red candlesticks, one or the other or both, where it's opening at one extreme and closing at the other extreme, or opening up here and closing down here, which is what creates the color of that body. And you see larger, consistent red or green candles, and especially like we've seen in a lot of the stocks in the bounce off the lows, where you'll see a lot of what I call well-bid candlesticks during the bounce, where there's a higher high and a higher low, and they're green and they're closing near the highs. So when you see that, those are the kind of stocks on a regular basis where you can get involved in those stocks and feel confident that there's going to be movement to make money, or if a stock moves against you, you'll know relatively quickly or relatively clearly when that stock has ultimately not done what you expected it to, which of course is a part of what we do. The challenge for most traders is finding the right stocks that move enough that they're comfortable enough trading with, and then ultimately understanding how to trade them. Because being comfortable with trading a stock and making money, and it's not the same thing. And that's actually a big thing too. If you look at a lot of the charts, and we'll take a look, we're going to look at stock screener that I use all the time to find my ideas going into the day. There's something called average true range. Average true range is how much the stock moves from the low to the high on average. And most softwares default to 14. So generally speaking, I look at stocks that move an average of $1.50 or more per day from low to high. So that gives me enough opportunity on a regular basis. Now that doesn't mean it only moves $1.50. That means that on average, it moves at least $1.50. Some of them could move $40 per day, depending on the stock, maybe something like Amazon or something like that. But here's the challenge. A lot of traders will want to be active and want to make money like I do, where I trade for cash flow, where I'm looking to boost my income every month. And whether it's a side hustle for you or whether you're a swing trader full-time, and that's how you make your living, you need movement. But the problem that sometimes newer traders encounter, and I did this when I first started trading, is we trade stocks that don't have enough volatility, and the same reason we're trading them, because we don't want to we don't want stocks that move too fast, so because we're afraid of losing money. That also, the other side of the equation is they're not moving too much in our favor, and it's hard to make money to justify being in the trade. So anyway, those are a couple of things that you really want to pay attention to, and I'll actually show you how to find average true range so you can get a feel. But the topic that I wanted to discuss, and what I really want to get to, most full-time active traders, or even, I shouldn't even say full-time, most active traders who are managing their own money, who trade size. And when I say trade size, for you that could be 300 shares, for anybody else it could be 3,000, it doesn't matter. You trade, the stocks aren't going to wear out. And if you read like the classic stuff, like Reminiscences of a Stock Operator, Battle for Investment Survival, if you read the How to Make Money in Stocks by William O'Neill, a lot of those books talk about reading the market first, getting an idea about whether the market is strong or weak, and then finding what you might call the popular stocks of those days, because they generally move with the market. They're the market leaders. So you kind of have and I want to use this phraseology very carefully, you kind of have a double-barreled conviction, because if you are skilled and you get good at reading the tape, if you're skilled and get good at reading the market, and those stocks normally move with the market, then you could kind of combine those two. Well, the market's obvious and my stock is obvious. They should move together and give me opportunities. If you watch yesterday's video where I talked about trade expectation, your trade expectation is higher because you're what I call, again, you're building an argument for a trade. I think it's going higher because of this, and because of this, and because of this, and because of this. Therefore, I think it's okay to accept risk on this trade because the profit potential is likely. And again, if you didn't watch yesterday's Stocks for Breakfast, I discussed that in great detail, where I talk about risk reward and what are the odds of actually achieving the reward, right? We can pick a number out of our head, but what are the odds of actually earning the profit? And if you feel confident, if you put together a great argument, like what I do with order flow and tape reading, you tend to feel more comfortable accepting risk, because you believe that you've done a good enough job of setting up a trade where it should move in the direction that you expect. And over time, if that happens enough, you should come out profitably every month, right? So in my world, which is, I've been day trading since 2000, April of 2000, as a matter of fact. I've been trading since 1994. I actually started trading commodities way back in the day. Professional traders, and again, keep your job if you have another job. Have trading as a side hustle. It can be challenging when you let go of that income cord. I don't recommend doing it unless you have a really long track record of bringing home money. Have it as a good side job. Is you want to find a core list of stocks that you could trade over and over again. They don't wear out as long as they have liquidity. And again, in my universe is at least 2 million shares per day. And the way I do it, now there's a couple of different ways to do it. You can trade ETFs day in and day out, which I know a lot of options traders do that. They trade the ETFs every single month, and they have their spreads and whatnot. Instead of looking all over the place for individual stocks, a lot of options traders, professional options traders, will do their spreads and however they make their trades on the popular ETFs like the SPY, the Qs, the IWM, and that kind of stuff. But for us as traders, I find it better. I find it easier to have a really good skill set to read the market. And then I have a group of stocks, a core group of depending on the week, the month, and the volatility, anywhere from 15 to 25 stocks that I trade day in and day out. But they're stocks that represent a portion of different sections of the economy, different areas of the market, so that if one sector, for example, let's just use for an example, the airlines, which have gone sideways since the collapse, there's really been no play there. And I'm obviously using the airlines because it's easy to explain right now. So if that's the only thing you're trading, your business is kind of shut down. So you really haven't had a chance to make money. Maybe that's a longer term investment from a trading perspective, where we're looking to maybe hold the trades for 3 days to 10 days to, let's say, a month or two. There hasn't been opportunity. So you need other things. So we went to what they're calling now the stay-at-home stocks during this bounce, and they were stronger, got consistent follow-through, closed on the highs quite often, had those large green candles. The monthly, weekly, and daily charts were all trading in a particular direction. So those stocks were in the universe for a while. So you're going to find that your universe of stocks that move with the market are the easier stocks to have conviction. Now remember, I didn't say easier to make money. I have to be very careful because I don't know anybody personally, right? So you need to do a little bit of research for yourself to find which stocks match all of the criteria that you're bringing to the market. And I am going to say this strongly. Do the work to find a list of stocks. And let's say you even only start out with 10 stocks. Maybe you find some oil stocks. And I'll just, again, I'll use exactly what I use. But let's say, for example, you use Chevron and ExxonMobil, and that's two. Like they're popular. They're a big part of what goes on in the market. There's plenty of liquidity. And then maybe you look at a couple of tech stocks that match your buying power and what you like to trade, or maybe some stuff you know. So you build up a list of 10 stocks. Learn those stocks on the charts and trade them when you feel comfortable that you have a good edge. And here's the thing. A lot of people, I can't watch 10 stocks. You're looking at those 10 stocks for opportunities. That doesn't mean you're going to trade all 10 all week. Maybe 2 out of the 10 this week are doing the same thing as the market, or maybe 2 out of the 10 are super obvious despite what's going on in the market, but you know those stocks like the back of your hand because they're a part of your universe. And those are the only 2 you're going to be focusing on. You don't need to be in all of them. You need a well to go to that when and if those stocks are obvious, and especially if they're in sync with the market, it should be stocks that you trade with conviction. So we're going to go over to a couple of different things. We're going to take a look at my universe in a little bit more depth, and I'm going to show you how I found those stocks. And it's not really rocket science. I'm in financials. I'm looking at oil stocks. I'm looking at tech stocks. I'm looking at some stocks that, again, the offline or stay-at-home stocks, actually, that's what they're calling them, which, by the way, they're petering out a little bit because now we're getting outside and some of those stocks are seeing profit taking. So then you have your scanner where you take a look at some stocks that meet specific criteria and you watch it for a little bit, and maybe you trade it lightly and you're like, wow, this stock is tradable. I can add this to my list and I'll take that stock out of my list, and I'm still have my 10, but took that one out because that sector is kind of dried up and the volume has been very light. So for example, for me, a stock that I never traded before but jumped into my scanner was PENN, P-E-N-N, and we'll take a look at that. So then I pulled something out and put PENN in there, and it's only a $30 stock that has $3 moves. That's a big move for a 3. So you don't need to be trading Amazon to make money. You just need to do a little bit of work to find the stocks that are right for you. So we're actually going to go over to the charts and just look at it briefly. And by the way, if you have any questions about this, absolutely leave a comment and we can discuss it. So if you see on the right-hand side over here, you can tell that obviously I'm actually going to sort it by alphabetical order. So you can see Apple, obviously, some of the stocks that are the market stocks that have good liquidity. So you can see, obviously, in Apple, it's very easy to see what I just demonstrated to you, the large green candles, the large red candles on a consistent basis. Amazon, obviously, a market stock, right? And you can also see how I'm working the charts here. Boeing is a stock that really did nothing for a while, just kept consolidating. But despite that, you can still see that there's good, smart money, institutional activity every day because you're seeing consistency in the size and the color of the candlesticks. They're a little smaller than we would like them to be, but that might also be distorted because of the size of the move. Then I'm moving over. So Boeing is one sector, right? Then we're looking at Chevron, which is another sector, and you can see how I'm working the chart here in Chevron. Then we have Goldman Sachs, which I've been talking about on a regular basis, and you can obviously see the consistency of the size of the candles. Now, just again, simply training your eye, like, wow, something different is happening here. We not only broke out of a 6-week trading range, but we have what I call fuel. So you can see now, as I discussed in yesterday's video, watching the financial sector. So JP Morgan, Citigroup, Goldman Sachs, and the XLF ETF. Lulu is another one. You can see that is kind of a market stock that had consistency to the institutional activity. So again, just train your eye. Are there large green or large red candles, or is there nothing going on? If there's nothing, the candles, you'll see little tiny bodies and a bunch of them, and I call that indecision. And if the smart money is showing indecision, why would we get involved at all, right? So again, MasterCard, so we're looking at these, excuse me, stocks that are benefiting from the stay-at-home stuff, where a lot more, MasterCard and Visa, a lot more transactions while people are bored at home. Excuse me, mRNA, clearly not a market stock, a stock that is actually more a stock of the moment, obviously with the COVID going on, and you can see the size of the candlesticks and large red and large green, which means there's been good intraday and day-to-day activity in that stock. So for an active trader, it's been relatively good to be involved with. Microsoft for obvious reasons, right? Netflix. So you can get a feel for how I'm mixing it up. And then I'm looking at PayPal, which obviously is the same concept as the stay-at-home increase in activity in online transactions. And you can see Penn that I discussed. You can see I actually did not trade this stock at all, but it started showing up in my scanner over here where it kept closing above the open on good volume. I'm like, that's pretty interesting. And then you can see the stock doubled in 6 days. So that's the general gist, and you can pause the video to see what else is in there. Obviously, I have Starbucks in there, Visa, Square, ExxonMobil. Then the next question comes in, well, how do you find the stocks that you want to add or subtract, right? So then you have to have criteria for a scanner, which you can see here. I call this my bullish perfect trade criteria. This is only one of them. I have a lot more criteria that I discuss in my order flow masterclass. But just to give you an idea of the criteria, you can see I'm looking for stocks for the bullish side that could potentially go into my list that are up 5% for the last week. So I want to know if something's traveled that week relative to the market. How is it trading? And then I'll click on it. And this actually, CAR is a good example. It's one that I haven't traded before, but you can see what a scanner can do to give you an idea of stocks that quote unquote might be in play now. So CAR has popped up into my list, and now I'm going back and forth to watch it every day. It's broken out of what we might call a channel or a trading range, and it's broken out on good volume, and I call that fuel. Large body candlesticks with large volume, which means smart money is leaving footprints, right? So that's how you go from your universe that I've already built to potentially finding new ideas. Again, if you look at this, maybe this was in your watch list, it went sideways for a long time. You're like, oh, the stock is not giving me any opportunity. I want to find something else. That's where the scanner comes in. It's very difficult to trade new stocks you've never traded before. So you want to watch the stock for a little bit. You want to trade lightly in the stock while you're getting comfortable with it. And then if you're making money and you feel comfortable in it and you feel conviction in your ideas, that's when you can go and slide it over into your main watch list. Now, the other way to do that, and again, FinViz, I don't get paid for this. This is simply the software that I use. This is a free scanner. And you'll know that because I have ads popping up all over the place, right? So then you could actually take it a little deeper. You go to groups and you go to overview. And I'll just give you a really quick way to do this without getting too far into the weeds. So let's just pick healthcare, just for argument's sake, right? So if we pick healthcare, there's 974 stocks that meet the healthcare criteria. So what we're going to do now is we're going to break that down a little bit further to find potential healthcare stocks that meet criteria that match your resources. So we're going to look for stocks only. Obviously, healthcare is only stocks, right? Then we're going to sort it by average volume per day. And again, this is my criteria. I like to keep liquid stocks. Average true range of at least $1.50. So we just sorted all of them down to 48 stocks out of the 974. So now what we can do is we can say, well, I only want to trade stocks that are over $20, again, just for argument's sake. And that's still 45 stocks. Now, what you can do is you could also sort it by volume, and now you just look at the charts. And you'd pay attention to which are what might be considered the market stocks. So obviously, Cigna, Biogen, not necessarily, that's a drug manufacturer, not nearly a healthcare. But you get the idea. You start to whittle it down to the stocks that you want to watch, and then pick 2 or 3. So then you have your healthcare stocks, and then you do the same thing with financials, and maybe you do the same thing with other sectors. So the point that I want to get across here is, in my opinion and in my experience, it's easier to trade a universe of stocks that you watch on a regular basis, do a little bit of research to choose which stocks you're trading. It could be oil and gas, it could be financials, it could be healthcare, it could, however you want to break it down. and then watch those stocks. Have that your little bit of universe, and then on a day in, day out, week in and week out basis, if you use my method, the order flow method, you say, oh, these stocks are obvious. I'm going to focus on those, or maybe one sector is up and one sector is down. So maybe you could buy those stocks, and if you're an advanced trader, you can short sell those stocks. But here's the key. If you do a good job of doing just a tiny bit of research, like I just explained, you'll always have opportunity as long as the market's moving, because if the market's moving, generally speaking, those market stocks will move. Now, what's kind of cool is if you do a good job of picking market stocks, if you do a good job of picking stocks that have liquidity, smart money activity every day, and opportunity with the average true range, even if the market's not moving, the Dow Jones Industrial Average has been pretty much in a trading range for 6 weeks. The NASDAQ stocks are very strong, so we were focusing on those. The S&P was kind of in a trading range that just bleeped out of. If the market's sideways, your market stocks still should have enough activity for you to find opportunity to trade. So you get a really good mix there of when the market's obvious, you kind of have double-barreled argument that you expect it to follow through in whatever direction you're looking at. But if the market's kind of slow, but you did a good job of picking market stocks, those stocks should have good everyday activity. So that's a very broad overview of how to start digging in and which stocks to trade. You don't have to make it complicated, but you do need to, make a pot of coffee and do a little bit of research. And it's not that complicated. I just showed you a very simple way of doing it. You just have to pick the stocks that make sense for you. So anyway, that's today's episode of Stocks for Breakfast. Hopefully that helped you. Obviously, if you have any questions, leave a comment below the video. But remember, stocks don't wear out. They might lighten up in volatility. They might go into a trading range. They might come out of play. But that's fine. That's what the scanner is for. You'll take those stocks out of your universe, and then when your scanner is telling you something else is in play, like pen, like I just showed you, you drop those into your universe, and you constantly are culling and adding and subtracting to your list based on, are you making money in them? Can you trade them comfortably? And are they active? So thanks for attending today's episode of Stocks for Breakfast. If you have any questions, leave a comment and definitely subscribe. I really appreciate it. Have a great day, everybody.